Hello guys, hope you have understood the transfer pricing structure. Now before going to the applicability section, which is section 92, I wanted to share certain terms and terminologies which are used under transfer pricing services or transfer pricing domain. You should be aware about that terminologies. And there are only certain simple terms which I have right now, put down in this entire learning set. But there could be some higher versions also. Once when you read the OECD guidelines or UN guidelines, or probably the other material which is available outside, there could be some other types of terms also, like bright line test, AMP, etc., etc. But I have just right now put down certain simple terms for you to understand. Also I have correlated that with the terms which are there under the act and provisions. We need to understand the fundamentals right now. We don't need to go to the higher terms at this point of time. So let me just share with you what terms we are covering or what terms we are discussing today. So guys, as you can see here, there is a transfer price. Basically, transfer price is basically the price at which the transaction has happened. So that is what we call a transfer price. Now what is ALP? Now ALP is basically the price which is applied or proposed to be applied in a transaction between persons other than associated enterprise in uncontrolled conditions, right? Now what is transfer price? Transfer price is the price which has been dealt with when a transaction happens between two related parties. What is ALP? ALP is the price which may happen under uncontrolled scenario. Now let me just give an example. If I am selling, so if there's a company called A in India and it has its own subsidiary in US, say B company. So in case if they are selling the goods at particular rate, let's suppose it's an 100 rupees per unit they are selling that goods, then that 100 rupees becomes the transfer price for that particular transaction, that is sales of good. But in case now similar goods A is selling to C company, which is not related party, which is not an associate enterprise, at 120 rupees, then that 120 rupees becomes the arm's length price, and that you have to compare with the transfer price. So that is what the concept of transfer price and arm's length price is. We'll just move ahead to the other definition, which is called enterprise. Now guys, under the term associated enterprise, there are two sub-terms, like one is associated, which shows the relationship. Second one is enterprise, right? Now what is enterprise? So enterprise has been defined under section 92F. If you study that definition, it says that enterprise means a person, and it also includes the permanent establishment of such person who is or has been or is proposed to be engaged in any activity, and there are list of business activities after that, whether such activity or business is carried on directly or through one or more of its units or divisions or subsidiaries, or whether such unit or division or subsidiary is located at the same place where the enterprise is located or at different place or places. This is a generic definition, but yeah, enterprise also. So here the main catch is, guys, that you need to also understand that enterprise includes permanent establishment of such person. Now let me just give an example. If there's a company called A in India, so there's an A company, right? It has its own permanent establishment in UAE. Then whatever transaction it does, so it has its branch office in UAE, let me just put it that way. So whatever dealings are there done between A company and its branch in UAE, that is also considered, so that this two particular branch is just an extension of head office, as we always say in normal in common parlance. But the branch will be treated as another other enterprise, and the main company will be treated as another enterprise under transfer pricing. So that is where in this definition, that is a person including a permanent establishment of such person. So person is also separate and a permanent establishment is also separate. So that is where it includes the thing in enterprise. Now guys, here also there's one catch. Now if I run a business, right, in India, and if I sell jewelry to the customers, now my sister is in US and she has, so I'm gifting her a jewelry. Whether me, that is my sister and my company would be enterprise under transfer pricing provisions or not? Certainly not, because if you see that if you see these activities, that it should be business between these two enterprises, right? In case if I'm giving a jewelry as a gift, then the transfer pricing will not be applicable, because my sister will not be considered as an enterprise. Correct. So that is where we need to understand that what enterprise means. But it should not be construed in a form that every time I can give a gift to my sister, because if she is also doing a jewelry business in US and I am doing here jewelry business, then if I'm sending goods to her, every time I cannot send it to her as a gift or in other form. But in case if she is doing business over there, in case I am doing a business over here, and there is a I'm sending her this entire consignment of whatever products in which she is also dealing, then this two entities becomes enterprise. So that we need to understand first. Then the act also defines specified date, which is due date for filing form number 3CB, which is date of 1 month prior to the due date for furnishing return of income under subsection 139 under section 139(1) for the relevant assessment year. Then there is definition of this transaction. Now guys, we need to understand the definition of, so there is a concept of international transaction, right? Now under that transaction, so now what is transaction? So 92F clearly defines transaction to include an arrangement, understanding or action in concert. Now let me tell you what is action in concert. Arrangement and understanding, we know that by way, but action in concert is also important when you see the transfer pricing applicability part. Why? Action is concert basically means, it has not been defined anywhere, but in general parlance it refers to a situation where two or more people, mostly parties to a contract or any other joint activity, agree to pursue a common goal and cooperate throughout its acquisition. So that is what action in concert means. Let me just give a practical example. So we had a client in Bangalore which had its own shared service center. The client was from UK. That UK client also had some other subsidiary in Bangalore which used to deal in the client's products, but this shared service center was rendering IT services. Now for certain some sort of reason, the Indian entity which was selling the goods of that UK client wanted to avail services of this shared service center for certain period of time, or certain services they wanted to avail. So they reached out to us, and somewhere we justified them that there exists an action in concert. So that is where the transaction which can be done with the Indian entity, between the Indian entity and the US entity, falls under the purview of the definition of transaction, and that is where transfer pricing provisions were applicable on particular that portion of transaction. Though these both entities were in domestic tariff area, but still the transfer pricing was applied to them, and that is where our view was a bit conservative, but yes, we apply transfer pricing on that particular transaction. Alright, so that is what action in concert means. This will not come in usual scenarios, but in complex scenarios or in some special cases it may come, else it doesn't comes under usual scenarios. We don't see that. Then after rule 10 AD, which also defines transactions to include closely linked transactions. Now what are closely linked transactions? So if I'm selling goods to my associated enterprise, so that is a transaction, but there's a receivable which is so I have sold goods to my associated enterprise. So now in my books, if the payment has not been made, then there will be an outstanding receivable for that sales of goods. Now under transfer pricing, that outstanding receivables is also considered a transaction, and the sale and that receivable, I can closely link them because they are related to each other. So this is linking of two transactions. So that is where this is one of the important concept. Now we go ahead with the other term, which is benchmarking process. Benchmarking process is it has nowhere defined, but it's a process that is you must have seen my recent LinkedIn post also. Benchmarking process is basically you benchmark the transaction, you arrive at arm's length price for that transaction, you do that TP analysis, and that is what we call a benchmarking process. That's it, and there is no other meaning to that. One, if you are using this term in common parlance, it would always mean the ALP analysis or transfer pricing analysis. So that is what benchmarking process means. Then we have uncontrolled transaction. Now let me tell you that what is uncontrolled transaction. Uncontrolled transaction is basically uncontrolled scenario. That is a transaction between the enterprises other than associate enterprise. This will be very important because you cannot benchmark a controlled transaction with the other controlled transaction. You need to benchmark that with an uncontrolled transaction. So that is where this becomes very important part, that every time when you go ahead with the benchmarking process, the other part of transaction, it may seem easy to hear that, but many senior counsel have also or probably the judicial authorities also have done mistake by comparing two control transactions. So this is the fundamental point that you should always understand, that you cannot compare a control transaction with a control transaction. All right, I'll just go ahead. Then there are services. So basically, service has been also defined to include the financial services such as giving of loan, equity, funding, guarantees, etc. So someone would may say that how can giving of loan be an income? But that is a type of financial services which has been provided by one entity to the other entity, and that is where this type of services are also included. So are also included in the transfer pricing purview. Now we also so now this were all related to some provisions. This way have been defined under some or sort of provisions, this all terms. But now we also will understand the terms which have not been defined in the provisions but which are used in common parlance in TP practice, which is called DEMPE. DEMPE is basically, it relates with intangibles, which means the breakup of functions of developing that intangible and using it. That is development, enhancement, maintenance, protection and exploitation. This is generally the term which is used when you deal with intangible transactions. Then after comes the OECD TP guidelines. It's not transfer guidelines, it's transfer pricing guidelines. So guys, this is also common term, OECD TP guidelines or OECD guidelines, which may come. I have already shared the link of that OECD TP guidelines on the day one. You may check that. Then there is BEPS. What is BEPS? BEPS is basically wage erosion and profit shifting. There was this project of BEPS which was introduced in year I think 2015. So it was under discussion. It was under discussion since 2009 or 2010, but it was formally introduced in 2015, where G20 and all the other countries also got united to implement some regulations to avoid tax base erosion and profit shifting, which was being done by the multinational corporations, or which is being done by multinational groups, very big multinational groups. That is where BEPS is entire project, which contains of many action plans. That is 13 to 14 action plans are there under BEPS, and under each and every action plan the country has to take the action on particular, they identified those areas, and then after each and every country has to take the action on implementing that entire project, so that there is a harmonious relationship between all the major countries in the world. And then after this you will be also understanding the term functional matrix. Functional matrix is nothing but a summary table which shows that what functions has been performed by which type of entity. We'll learn that when we learn this functional process. I hope these definitions are clarified. Now I'll meet you in the second video, where we'll be starting with section 92. Hope you are enjoying this learning. Relax, take it easy. I'll meet you in second video.